This is circumstance of the end of fiat and debt-based system. It is.
You're watching Silver News Daily. Subscribe for more. Silver is on the brink of a historic surge, and market analyst Francis Hunt believes it could skyrocket to an unimaginable $1,000 per ounce. Imagine the potential gains as silver, a crucial metal for technology and renewable energy, shatters its current resistance levels. Stay tuned as we uncover the factors driving this explosive prediction and reveal how you can benefit from this once-in-a-lifetime opportunity. Make sure to subscribe and hit the notification bell to stay ahead in the world of precious metals.
I always think you want to start from the big time frames. Remember what continent you're on, kind of that thinking, and then you drip down to state level, municipal level, home, street level, home, back garden, beach chair, the sun lounger. So start from top down. This is a macro bull, and this isn't even the biggest of charts. I can take you pretty far out. In fact, you can argue that since 1977, you're actually in an extended, largely bull market, which counters the fact that we're in central bank policy is largely inflationary. However, you've had very long pullbacks that most people would say are bear markets, unless you live 1,000 years and a decade is just a moment in your lifetime. But that was obviously on the log scale chart, an extended bear period. And that represented the financialization of everything, the success of the free float, the 71 removal of the gold fix. And then you got your next stage of bull market. You then again got a pullback. Most people, again, would refer to these as bear markets because of the duration, but it all depends on your time frame. If you're up here, for me, you're still in a bull market. This was all a basing out structure. Yes, it took decades to happen, but you can wait decades for anything to happen, and then decades happen in weeks. And we've broken this key level at 2K and out of this pattern on the monthly time frame. So this is a macro bull. So to your people that you're speaking to, going back to the 3-day charts to just get us back into the recent price behavior, this is a pullback period, but I would accumulate on dips. I would certainly accumulate on dips and dollar cost averaging. If I had a huge lump sum and I was adding gold to my portfolio for the very first time, I might hold out to see if I could get a tiny bit lower, but I'm not sure. This points to a falling wedge generally, and typically we talk about the 3-impulse falling wedge. So falling wedges are by definition continuation patterns, and we talk of a 3-impulse falling wedge. It certainly looks to what we define as the 3-impulse falling wedge very much in play. So a bit grindy on the bull side, kind of steep and brutal on the downside. You see those momentums, a bit not so good for metals. Again, a bit flag-like of a grind, but this time the sell-off is brutal, but shorter. And now on the upside, we're a little bit more lively, and you've come back down, and now it seems like support. You often get a support point in that third. So the breaking of this capping descending grind line that I've doubled up for you in pink will be the beginning of a reassertion to upside. So this strikes me, even going back to my lump sum right now for the first time, I actually don't even think it's a bad time right now. There are 1 or 2 events that could work against you. Sometimes you get to pop out the bottom first before you break to the upside. But generally, I would expect this falling wedge to resolve to the upside with a break of this double line here, which I've now put a blue stripe in the middle of. So I think it's a great time broadly, and you'll be a bit unlucky if it dips on you. And anyway, it should be an investment. So if you did get this scenario with a dip down, you just keep on going and you keep pedaling, and you accept you're not there to make green in the first day. You're there to preserve capital on the long haul. So either way is a buy.
Silver is making headlines as it enters its 5th consecutive year of supply deficit, with demand skyrocketing due to advancements in technology and renewable energy. Recently, silver has surged past the $29 per ounce mark, approaching price levels not seen in over a decade. Analysts are buzzing with predictions, especially after the latest U.S. inflation report showed signs of cooling, sparking bullish sentiments across precious metals markets. Unlike gold, which has seen a steady rise, silver's performance is unique, influenced by both its financial and industrial applications. As the global economy eyes potential Federal Reserve interest rate cuts, silver stands out, with prices predicted to continue their upward trajectory. Industrial demand for silver is at an all-time high, driven by its essential role in solar panels and other clean energy technologies. This demand is draining global inventories, adding more pressure on supply. With the market heading towards a significant shortage, the stage is set for a dramatic price increase. Silver has always been seen as gold's less glamorous cousin, but with its recent performance, it's proving to be a hot commodity. As Francis Hunt dives deeper into these dynamics, we'll explore how these trends could propel silver to unprecedented heights. Don't forget to subscribe for more insights on this incredible journey.
Important to understand, and we had this discussion to some degree in a roundabout way in previous chats that we had. Gold is the leader. You should always start with gold being predominant. Silver should be something that I still think you should have it personally, but you shouldn't be overweighted, and it's something you rotate some of your gold into as everything really begins to kick off. And the gold-silver ratio is the break that you want to have happen for when you then start overweighting silver. So initially you start overweighting gold. You still have some silver, you overweight gold. But in the same way, a key level and shoe did drop, Elijah. When we've been showing you this pattern for eons. It feels like eons. This was around about 2020 when the high. You had the Wall Street bets there. You had another attempt, knockback. You had quite a few knockbacks on this capping descending grind line that we've had. This is the first break above this level. It ran really far in quite a short time, and it had come from that secondary low. We called it a soft floor at 22. Apart from a few small spills, you started to show great respect for the 22. So you've actually done quite a bit. 22 to around 28, 29s was a good run. To have a pullback of 38 or 50% is absolutely normal. Bear in mind what I just said to you about gold. For now, silver is still the trailer with the big fat bungee cord. It needs the 4x4 to be driving to maintain momentum. There is a lot of tension in that bungee cord, which is a peculiar version of a tow bar. But if we drop it again to the lower time frames, it's doing very similar technical structure. So just tidy that up. You've got the same falling wedge. It just is a higher beta. So in percentage terms, it comes off more, but technically it's mirroring gold. So when this breaks, I would still expect it to outperform gold, and we should start to see that gold-silver ratio that we're always talking about also come back down. It's still in its flag, so maybe I should get that up. So I'll grab that. That's the T-bills. We'll grab that. As we've said, while we're seeing those T-bills, remember, the debt market has turned irrevocably in our view. In other words, generally rates will only be going up if debt will be devaluing. That's our default scenario. Cuts will be minor, short-lasting. So if we let the lines back on and we drop down to a smaller time frame, that triggering event that we keep talking about occurs when you break that red dashed line. And it's getting really, really hard for this gold-silver ratio to keep plowing, because the problem with this level, Elijah, is that it keeps marching up. So you have to keep undervaluing silver by ever more. And eventually that doesn't hold. It simply doesn't hold. It's not found in the levels it needs. It's being consumed. That was typically our splitter, how it runs. This is turning into a bit of a shooting star. So you're wicked up to our midpoint and now you're being sold off. By the end of the week, this could be a red candle, even though there's only what's left of today and tomorrow to play. Because if the dollar comes in weak, big moves happen on a Friday when it's live trading day with us and non-farm payroll day. And we always do live trading because that is such a key event, and it sets you up. If you're on the right side of the macro trend and you understand what the dollar is going to do, you've got a better chance of knowing what Bitcoin, gold, and silver will do. Although, as I've already highlighted, the precious metals have shown they can go up now on the strong dollar. So if we get the right kind of NFP number, this could come back down and we could be asking the question. It has cried wolf a number of times with us, as I like to say, but the bigger and the more times that happens, the bigger the move. Remember gold, breaking that big flag pattern that I was showing you in the first instance on the bigger time frames. We were waiting a long time for that to happen, and then it just broke. Treated the 2K as support, so the 2K is that blue line, and then it spat up really strongly. So the wait is worth the while when the action comes, and it was.
Francis Hunt, a well-known market analyst, is making bold predictions about the silver market, and the numbers are eye-popping. With silver currently trading around $29 per ounce, Hunt foresees a dramatic rise, potentially reaching an astounding $1,000 per ounce. This isn't just speculation. There are solid factors driving this forecast. First, let's talk about the growing demand. Silver is crucial in various industries, from electronics to renewable energy, particularly in solar panels. As the push for green energy intensifies, the demand for silver is skyrocketing, creating a supply crunch. Secondly, the economic environment is ripe for a silver boom. Inflation is a significant concern, and silver, like gold, is a hedge against inflation. Recent reports indicate that inflation rates are cooling slightly, leading to expectations that the Federal Reserve might cut interest rates. This scenario is bullish for precious metals, including silver. Furthermore, market sentiment is shifting. Despite its strong fundamentals, silver has been underappreciated compared to gold. However, as more investors recognize its value, we're seeing increased interest in silver investments. Notably, physical sales of silver are picking up, and major inventories are being depleted. Francis Hunt believes that these combined factors are setting the stage for a massive price surge. With supply constraints, rising industrial demand, and favorable economic conditions, silver is poised to break through its previous highs and potentially reach the $1,000 mark. Stay tuned as we dive deeper into this exciting market shift and uncover the full potential of silver. Don't forget to subscribe to our channel to stay updated on the latest insights and analyses.
As well, because it's a tale of two different outcomes here. This is the dollar index, Elijah. You'll see it over here. Now, I've started off on an 8-hour. I'm going to maybe just before we go into the weeds here, just go up a time frame a tiny bit. Let's go 18 hours and just highlight how that thick pale blue line got there. So we're technical, we like the charts, and we saw a reversal going down on the dollar index here. And it was a very seminal level at 102.5, and that gave us an inverted head and shoulder. And that's typically a reversal for upside. In other words, we're expecting some dollar strength at that period. And then we had a target around here. So what ended up happening is you had a nice little squeeze, you broke up, broadening, we went and made that 104.7 target. And then after making targets, the reason they're targets is you tend to fizzle and you have a loss of momentum. So now let's take it back to the timeline where we started, which was the 8-hour. And what you'll see is we came back and we revisited that neckline, which is a key level for the dollar right there. So take those drawings off right there. And that turned out to be, and this is an important point because you and I are talking right now, and this will date timestamp us, just before the non-farm payrolls of Friday. Maybe by the time this is out, there will be some answers already. But this was a non-farm payroll day 2 months ago. And it was served as a turning point, and technically we saw that marry up with the 102.5. You started to see in the dollar index that it was reverting back bullish, but that was its current low at the time. Gold had already been moving up before that. Gold had been moving up during this period, and then even more, quite strongly, into that dollar weakness. So while the dollar was weakening, gold was strong. That's the typical relationship. As you've just mentioned, your previous guest was pointing out that gold was going up on a stronger dollar. So since that non-farm payroll, actually there's been more, my personal take, and I agree with Mr. McLeod, my personal take is that we're actually getting the gold now as a higher fair trade value against the sustainability of the system, which is the capital preservation respect that I've said it always deserves because of the debt market collapse.
One of the most compelling drivers behind the potential surge in silver prices is its crucial role in the technology and renewable energy sectors. As the world increasingly turns to green energy solutions, the demand for silver, An essential component in these technologies is skyrocketing. Silver's unique properties make it indispensable in the production of solar panels. It is a key element in photovoltaic cells, which convert sunlight into electricity. With the global push for clean energy, the solar industry is experiencing exponential growth. This year alone, the use of silver in solar panel production is expected to reach record levels, contributing significantly to the overall demand. Additionally, silver is vital in various other high-tech applications. It's used in the manufacturing of electronic devices, medical equipment, and even in the automotive industry for electric vehicles. These industries are expanding rapidly, further intensifying the demand for silver. With such strong industrial demand, the market is already facing a supply deficit. This deficit is expected to widen as the renewable energy sector continues to grow and technology advances. Industrial users, who typically rely on miners for their silver supply, are now seeking additional sources by tapping into global inventories, which are being depleted at an alarming rate. Francis Hunt emphasizes that this escalating industrial demand, combined with the supply shortages, sets the stage for a significant price increase. As the silver market tightens, prices are poised to rise, potentially reaching unprecedented levels. Don't miss out on the opportunity to stay informed about this dynamic market. Subscribe to our channel for more in-depth analysis and updates on the factors driving silver's potential explosion to $1,000 per ounce.
So while the dollar has actually worked its way stronger, this is against the key suspects, the main currencies that includes the Swiss franc. The euro is the predominant part, around 53%, a bit of pound in there, and obviously a bit of yen, which isn't exactly doing that well. So it's dominated those currencies. However, once the dollar index pivoted, and it had a secondary low here, marginally higher, and we'll come back to that when we have a look at Bitcoin. But you could see it move quite firmly up. But gold was flat for a short spell and then continued to go up. And in actual fact, it's almost trading more like the Dixie in this most recent phase, because the expectations were for big rate cuts. They haven't come. They continue to get pushed out. It's a case that we've always made. They can't cut near as far. They can't do near as big. And it will be one of the few truisms that the Fed said, higher for longer, on the basis that they need debt to devalue, and debt to devaluation. Yeah, and there's not the bid for it to do anything else, by the way. Recent issuances have been terribly covered. There's no appetite at all. And the last buyer of last resort will, in fact, be the Fed itself, or the mysterious offshore entities in Belgium, as I sometimes like to joke. So you can see that in actual fact, since this point here, gold and the dollar have largely moved pretty much in tandem. Only, I must highlight, gold has done more than the dollar. So it's an outperformer in the fear trade and the capital preservation trade. Now, dollar often goes up when everybody is scared and afraid, the safety of US treasuries, etc., and the currency gets bid in crises. And what we're actually seeing now, that Alistair was highlighting, is gold was going up on a strong dollar. And that's one of the big shoes to drop. Now, many people will say, well, it's going down now. Well, the dollar's having a bit of its uncertain period too. And we're about to have the biggest data release of the month come tomorrow, which being Friday, which is going to be very, very interesting for the direction of the dollar. So if the expectation is, no, there'll still be some cuts this year, we're not cutting it back that much, you might get weakness in the dollar. And my expectation is this falling wedge could break to the upside on that. Don't forget, gold was going up while the dollar was weak. It's the natural counterparty relationship, and it certainly does well when the dollar is weakening. Even if it strengthens, let's say we get a blowout big number on non-farm payrolls, that's actually going to create, again, the double trap that they've now created for gold. Well, that means fear. That means rates are going to stay high. Everybody else in the rest of the world is going to suffer because they're going to have to match rates. Otherwise, they'll have the pound crisis and the pensions crisis that the UK had. They'll have what the Japanese are currently having and desperately need a break from their devaluing currency. And that, again, could see gold go up. So it's kind of heads, gold wins, and tails, the anti-gold guys lose. So it's kind of either way, gold is a winner at the moment. So
economic indicators are playing a pivotal role in shaping the future of the silver market. Recently, The U.S. inflation report showed signs of cooling, creating a ripple effect across financial markets. This development is particularly significant for silver, as it often benefits from economic conditions that favor precious metals. Inflation has been a persistent concern, with prices rising steadily over the past year. However, the latest data revealed a slight decrease, leading to renewed optimism among investors. This cooler-than-expected inflation report has sparked speculation that the Federal Reserve might consider cutting interest rates sooner than anticipated. The prospect of lower interest rates is highly bullish for silver. When interest rates fall, the opportunity cost of holding non-yielding assets like silver decreases, making them more attractive to investors. Moreover, lower rates can weaken the US dollar, further boosting the appeal of silver as a safe haven asset. Historically, silver has thrived in environments where inflation is high and interest rates are low. The current economic landscape appears to be aligning perfectly for such a scenario. Analysts predict that if the Federal Reserve moves towards rate cuts, silver prices could experience a substantial upward trajectory. Francis Hunt points out that this alignment of economic indicators creates a unique opportunity for silver to break through its current resistance levels. As we watch the Federal Reserve's actions closely, the potential for silver to soar becomes increasingly plausible. Stay tuned as we continue to explore the intricate dynamics of the silver market and how these economic indicators could drive prices to unprecedented heights. Don't forget to subscribe to our channel for the latest insights and updates on this exciting journey. Let's delve into the expert insights of Francis Hunt, who is renowned for his keen analysis of financial markets. Hunt has been closely monitoring the silver market, and his predictions are nothing short of electrifying. He believes that several critical factors are aligning perfectly, setting the stage for a significant surge in silver prices. Firstly, Hunt highlights the persistent supply deficit in the silver market. For 5 consecutive years, demand has outstripped supply, and this trend shows no signs of slowing down. The deficit is exacerbated by the skyrocketing demand from technology and renewable energy sectors, particularly solar energy, which heavily relies on silver for photovoltaic cells. Secondly, Hunt emphasizes the macroeconomic conditions favoring silver. The recent U.S. inflation data, while slightly lower than expected, still indicates high inflation levels. This environment is conducive to higher silver prices as investors seek assets that can hedge against inflation. Additionally, the possibility of the Federal Reserve cutting interest rates further boosts the bullish outlook for silver. Hunt also points out the historical performance of silver in similar economic conditions. He notes that during periods of high inflation and low interest rates, silver has historically performed exceptionally well. This pattern is likely to repeat, given the current economic climate. Moreover, Hunt underscores the sentiment shift among investors. Despite silver's strong fundamentals, it has been somewhat overlooked compared to gold. However, as awareness grows about silver's critical role in emerging technologies and its favorable economic conditions, investor interest is increasing. Physical silver sales are rising, and major inventories are being rapidly depleted. In summary, Francis Hunt believes that the confluence of supply deficits, robust industrial demand, favorable macroeconomic conditions, and shifting investor sentiment are all pointing towards a dramatic increase in silver prices. He is confident that these factors will drive silver to break through its current resistance levels and potentially reach $1,000 per ounce. As we continue to unpack these insights, make sure to subscribe to our channel for more expert analysis and updates on the silver market's exciting prospects.
The big thing about 2008 that doesn't apply in 2024-25 is that previously everyone trusted treasuries, and the dollar was the main fiat trade, and gold wasn't particularly. Didn't do badly, but it wasn't the primary beneficiary. You didn't have central bank buying at the rates that they were buying recently. And what has changed, and also the scope for proliferation and new money and new levels was still in existence in 2008. That runway, that bit of extra runway, has already been deeply used. So you're sitting in a scenario where people are now viewing treasuries as having a risk premium of failure. So if you take the shadow stats, which has you at around, I think it's around on 1980s number, he's got it at around 12.5%. So basically taking the formula of 1980, that's Reaganomics. If you apply that, The average American is facing 12.5. And that means you're getting a guaranteed loss of around 7.5% right now on treasuries. So in terms of how much things are going up, your living costs, things to buy, we've spoke about the softs in many videos recently. You know, you've had coffee, both beans, Robusta and Arabica, absolutely running. You've had cocoa, absolutely running. These are, you know, where technology has expanded, bigger scale is applied. These are inherently disinflationary because we get better at getting more beans out of the ground, etc. And what's actually happening is, you know, cacao's gone up since October last year, 245%. Yes, they're having a little pullback now after a major move. Yeah, both coffees gone up, you know, substantially. Robusta almost 100%. It's the cheaper bean. Arabica around 65. You know, these are things that are the last things to ever go up. So this tells you dollar devaluation, not against other currencies, against everything else, not just gold, beans. Good old coffee beans, good old cocoa beans. It's losing value against everything. They'll try explain away, oh, there was a flood here or yields weren't so great. Actually, delivery and crop sizes are pretty consistently good across most of those. There's been no major blowouts truly in any of those yields. This is circumstance of the end of fiat and debt-based system. It is now in an accelerating parabola.
Market sentiment and investor behavior are crucial in understanding the potential for silver's dramatic price increase. Despite its strong fundamentals and promising future, silver has often played second fiddle to gold. However, this trend is starting to shift, and it's important to understand why. Historically, silver has been viewed as the more volatile cousin of gold, often overshadowed by the latter's stability and prestige. Investors have traditionally flocked to gold as a safe haven asset during times of economic uncertainty. However, the dynamics are changing, driven by silver's dual role as both a precious metal and an industrial commodity. Currently, we are witnessing a growing recognition of silver's unique position. As more investors become aware of silver's critical applications in technology and renewable energy, its appeal is increasing. This shift is evident in the rising physical sales of silver. For instance, Singapore-based dealer Ilver Bullion reported a significant uptick in silver purchases, with 74 ounces of silver sold for every ounce of gold. Additionally, the gold-silver ratio, which measures how many ounces of silver are needed to buy 1 ounce of gold, has been historically high. It currently takes about 80 ounces of silver to buy 1 ounce of gold, compared to the 20-year average of 68. This indicates that silver is undervalued relative to gold, presenting a potential investment opportunity. Investor sentiment is also being influenced by the broader economic context. With inflation still a concern and the Federal Reserve potentially cutting interest rates, the macroeconomic environment is becoming increasingly favorable for precious metals. Silver, with its unique blend of financial and industrial demand, stands to benefit significantly from these trends. Francis Hunt believes that as the market recognizes these dynamics, investor behavior will shift further in favor of silver. This increased demand, combined with existing supply constraints, could propel silver prices to new heights. The hesitancy of investors to fully embrace silver is waning, and as confidence grows, so too will the price. Stay tuned as we continue to explore how these market sentiments and investor behaviors are shaping the future of silver. Don't forget to subscribe to our channel for more in-depth analysis and the latest updates on this exciting market.
I'm not overly concerned by this pullback. This looks really good. And I do just want to contrast it, Elijah, as part of answering you. So I put the two charts on at the same time. I'm going to take the gold out and I'm going to say, whilst there's a key point I want to make here involving Bitcoin, which is supposed to be the digital gold. Now, obviously, it has gone up immensely in percentage terms. But if we just have a look at this chart on the same time frames, the high for Bitcoin was over here. In other words, it was roundabout, you see the 8th of March, that was the low for gold. It went up and it went down, and then it started to go quite strongly up. So that was another localized low. That was top Bitcoin. You had a little bit of initial momentum climbing over here. You had a leading indicator with the possible turn in dollar. It wasn't strong yet. It eased again. And then from that move up, Bitcoin has been down. That was at 74K high. And since then, on the strong dollar, it's actually performed quite poorly and is down here at around at the 59 after trading 56. 74, 56, it's not insignificant. Now, this is typical around halvenings, but and this is not a bear call on Bitcoin. I do think it'll shrug this off and it'll go up. And being a high beta, it can indeed go up faster than gold. But when it comes to real fear, the big money moves the markets and the central banks are buying gold, not Bitcoin. Now, BlackRock will rush to tell you that they're going to go sovereign wealth funds and central banks and everybody. That's still to happen. At the moment, people choose gold when there's uncertainty, and that would be my take.
Let's explore the potential catalysts that could propel silver prices to unprecedented heights, possibly reaching $1,000 per ounce. Several key factors could serve as the ignition for this explosive growth, and understanding these catalysts is crucial for anticipating the market's next moves. 1. Supply shortages. One of the most immediate and impactful catalysts is the persistent supply shortage in the silver market. For 5 consecutive years, demand for silver has outstripped supply, leading to a significant deficit. Industrial users, especially those in technology and renewable energy sectors, are draining inventories at an alarming rate. With stockpiles at major exchanges near record lows, any further increase in demand could exacerbate these shortages, pushing prices higher. 2. Rising industrial demand. Silver's role in high-tech applications and renewable energy technologies is expanding rapidly. The metal is essential for the production of solar panels, electronic devices, and medical equipment. The growth of the green energy sector, particularly solar energy, is driving unprecedented demand for silver. This robust industrial demand is a key factor that could lead to a substantial price surge. 3. Inflation and monetary policy. The macroeconomic environment is also set to play a critical role. With inflation still a significant concern, silver's status as a hedge against inflation becomes increasingly attractive. Recent U.S. inflation reports have sparked speculation about potential interest rate cuts by the Federal Reserve. Lower interest rates generally boost the appeal of non-yielding assets like silver. Additionally, a weaker U.S. dollar resulting from rate cuts could further enhance silver's attractiveness. 4. Shifting investor sentiment. Investor sentiment towards silver is changing. Historically overshadowed by gold, silver is now gaining recognition for its unique advantages. Physical silver sales are increasing, and the gold-silver ratio suggests that silver is undervalued relative to gold. As more investors recognize silver's potential, demand is likely to rise, driving prices upward. 5. Economic and geopolitical uncertainty. Economic and geopolitical uncertainties can also act as catalysts for silver prices. In times of global instability, investors often flock to safe haven assets like precious metals. Silver, with its dual role as a financial and industrial asset, stands to benefit significantly from such trends. 6. Technological breakthroughs. Technological advancements that increase the efficiency or application of silver could also drive demand. Innovations in electronics, medical technology, and clean energy could create new markets for silver, further tightening supply and pushing prices higher. Francis Hunt believes that these catalysts, individually and collectively, could set the stage for a dramatic increase in silver prices. As these factors converge, the potential for silver to break through its current resistance levels and reach $1,000 per ounce becomes increasingly plausible. Stay tuned as we delve deeper into these catalysts and their potential impact on the silver market. Don't forget to subscribe to our channel for the latest insights and updates on this exciting journey.
Once, twice, 3 times, and the 4th time a lady, and we got the same with silver. So when that gold-silver ratio breaks, the longer it's been held off, the better the move you end up getting, which is why, as we assert, it's going to be disorderly to the downside when it breaks. Because eventually that dam wall pressure is building, the water's getting too high, it's getting bigger, the structure can't hold it. And when it eventually smashes, you actually have, megatons coming down. It's not some small break. And then I would expect it to trot right down through 65 in short succession, running through 75, right down to 65. And that's when we might get our first little bounce back. And I think gold and silver are at significantly higher numbers by the time that occurs. We've suggested that you could be in the 45 to 50 range by the time you get down there. And then you will know if gold is 65 times that, roughly where your gold price would be. It's probably worth doing the mathematics if you'll indulge me. So if we, let's say the low side of 45 and we multiply it by a 65 ratio, you're going to be at the 3,000 target that we've suggested you should be making. And then I would expect a little bit of pushback, and then we'll go into another stall period. But on top of that, the stall periods are getting less.
Now let's bring it all together and explain exactly how these circumstances could lead to silver reaching $1,000 per ounce. The convergence of supply shortages, rising industrial demand, favorable economic conditions, shifting investor sentiment, and potential catalysts create a perfect storm for silver's unprecedented price surge. Conclusion: silver's persistent supply deficit, driven by its essential role in technology and renewable energy sectors, is creating a tight market. With inventories depleting rapidly, any further increase in demand will exacerbate these shortages, leading to higher prices. Industrial users, particularly in the solar energy sector, are consuming more silver than ever, intensifying the supply-demand imbalance. Economic indicators, such as cooling inflation and the potential for Federal Reserve interest rate cuts, further support a bullish outlook for silver. Lower interest rates reduce the opportunity cost of holding non-yielding assets like silver and can weaken the US dollar, making silver more attractive to investors as a hedge against inflation. Historically, silver has thrived in similar economic conditions, and the current environment appears ripe for a significant price increase. Investor sentiment is shifting as well. While silver has often been overshadowed by gold, it is now gaining recognition for its unique advantages. Physical silver sales are rising, and the undervaluation suggested by the gold-silver ratio presents a compelling investment opportunity. As more investors recognize silver's potential, demand is likely to rise, driving prices upward. Geopolitical and economic uncertainties also play a role. In times of global instability, investors flock to safe haven assets like precious metals. Silver, with its dual role as a financial and industrial asset, stands to benefit significantly from such trends. Furthermore, technological advancements that increase the efficiency or application of silver could create new markets for the metal, further tightening supply and pushing prices higher. Call it action. Stay informed and ahead of the curve by subscribing to our channel. We will continue to provide in-depth analysis and updates on the silver market and other exciting investment opportunities. Join the conversation and let us know your thoughts in the comments. What do you think about Francis Hunt's prediction? Do you believe silver can reach $1,000 per ounce? Disclaimer: please remember that this video is for informational purposes only and should not be considered financial or investment advice. Always conduct your own research and consult with a professional financial advisor before making any investment decisions. Thank you for watching, and stay tuned for more insights on the dynamic world of precious metals.